Hi guys, for today's trade of the day, we'll be looking at the pound CAD. And as usual, we want to start off with the monthly. So now we're on a monthly chart. We see that the pound CAD actually made the last time it made a high was back in August 2015, and then it immediately dropped and made a low a year later in October 2016, after which it kind of moved sideways in a sort of a rangy movement. So what we want to look at on the monthly time frame, we want to look for the long-term resistance level and the long-term support level. Graphically speaking, I've identified the long-term resistance at a 1.8092 level and the long-term support at a 1.5839 level. Now what we want to do now is to use Fibonacci to find whether this long-term resistance, long-term support falls in line with any Fibonacci ratios. That's by means of retracement or extension, and we can take an extension. I've taken the extension from this point to this swing high and back to the swing low. We pull out all the Fibonacci ratios and we see that long-term resistance actually falls nicely at the 88% level, right? And if we were to take a retracement from the swing high here all the way to the swing low, and we open up all the Fibonacci ratios, we see that this 88% also falls nicely with the 50% level. So let's just leave the 50% level there. Now we want to do the same also for long-term support. So I'll take an extension from swing high here to the low and back to the spike here, and I see that again the 88% level falls in line with the long-term support level. Okay, so with that, now that we've confirmed our long-term resistance, long-term support, let's go down to the lower time frame. We move on to the weekly. On the weekly, we just want to focus on this level here. So it's a sort of a, again, it's sort of a rangy sideways movement. Okay, and let me just tidy up this long-term resistance. I'll just move it all the way to the top here, and it's actually, we realize that this is actually a zone. What we want to do here is we want to see, because price is sort of moving sideways, we want to see whether price would actually from here make a push up towards the long-term resistance, or from here make a push down to the long-term support. So what we want to do now is we'll try to look for any graphical support and resistance. This seems to be a strong graphical support. If I were to draw a line starting from here, horizontal graphical support, see price tested it as support, went up, broke, came here, rejected off below, so support became resistance, and the moment it broke, it came back and tested and reacted twice, so resistance now is back again on support. Okay, we're going to confirm whether this level falls in line with any Fibonacci ratio. So I take a retracement from this swing low here all the way to the high, and I pull out all the ratios. We see that it falls quite closely to the 61.8. So let me just highlight this level, and I'll just adjust it and realize that it's actually a zone. Okay, so we have this zone here. Now 61.8 is a key Fibonacci retracement level. What I can see here is that it could be possible that price could make a push up from this level, but we've yet to confirm that, and that's on. And now that we're on a weekly time frame, we will have to go down to the lower time frame to confirm our bias. So let me just label this as the weekly support. I want to see whether I can find any weekly resistances. So for now, let me just use an extension tool, Fibonacci extension from here, swing high and back down to here, and let me confirm that by pulling out all the ratios. We see that the 61.8 is actually at this level. I ignore this spike because this spike is an abnormal spike. We realize that all the other price spikes are not as long as this. That's why I ignored this level. So let me just highlight the 61.8 extension, and I will draw a resistance level across. And I'll call this the weekly resistance. Alright, Now that we found our weekly resistance and weekly support that has been confirmed with Fibonacci levels as well, let's go down to the daily. Let me tidy this up. Okay. Okay, so what we have here is, let me expand this. What we have here is that price has actually come down and is sort of testing and within our weekly support zone. And what I expect to see is for price to make a push up towards the weekly resistance at least, because this is a key support level. I want to see whether we can find any other stronger supports, confluence for support at around this 1.6546. So I'll do a zigzag by means of using Fibonacci extension. Here, swing high to the low here, and then back to the high here, and let me just pull out all the ratios, and we see that the 161.8 extension falls nicely within our weekly support zone as well. So let me just highlight that. Okay, so and we want to find whether there's any other daily intermediate short-term targets that we can play to. So I'll just do a retracement from this swing high all the way to the low, and I'll pull all the ratios. I quite like this 50% level, or even the 61.8% level, but 50% level seems to fall in line with this graphical spike over here. So I'll just leave the 50% level, and I'll add in a daily resistance. Okay. There you have it. We have all our key levels, and what I'm looking to do is, the moment price is within this weekly support zone, I'll look for a buy, and I'll play towards the daily resistance at a 1.7264 area as my first take profit. The moment price reaches this first take profit, I will close out 50% of my position and move my stop loss to break even, and then I would let the rest of the position run towards the weekly resistance and possibly even the long-term resistance. Alright, so now this is my entry zone. Where will I put my stop loss? I would actually put my stop loss at the 78.6 level, or graphically I can choose to put it here as well. So this could be a possible stop loss level, right? Anywhere from here to here is 78.6 could be a possible stop loss. So once again, my entry zone is this area, my first take profit, second take profit, with my stop loss here. And that's the trade of the day. Thank you.